Oh, well, it's good to see a lot of friends and ex-colleagues here, so thank you for turning out. So it's my pleasure to welcome James. So he's Head of Partners with Pepperstone, and we've got Melody, the Senior Lawyer at Sophie Grace. So we're going to be covering off on IBs on this topic. So, first question. Is the IB business in Australia dead, or is it just me?
I think you've still got a pulse, Chris. I'm hoping that you're not dead. And I'm hoping that the IB business in Australia isn't dead, given the fact that that's largely my job, because I might be out of a job myself. The landscape has evolved a lot over the years. So I think probably 10 years ago or 11 years ago, FOFA was introduced, which limited rebates to retail clients. That certainly was a hurdle to IB business in Australia, but it still exists. We still have licensed partners who introduce business to us in Australia, and we pay them volume-based rebates on the back of that. But again, it's important to know that now it's very strictly regulated, and I guess the concept of paying volume-based rebates itself, whether it's to a retail or a wholesale client, almost forms part of the definition of a financial service. Melody, I think you could probably speak more to that though.
Well, just going back to the question as to whether the IB business is dead. So in our experience, I think the retail IB business in its current form is very difficult. The wholesale IB business is still okay. The retail IB business is quite difficult because in Australia you have things such as the ban on conflict remuneration, the product intervention order that restrict Australian IBs to only do Australian business, and the product intervention order as well. So so Australian IB business is quite difficult. Saying the licensing, I think IB requires financial services license in Australia, but it's now very difficult to get one. We have helped a lot of IB to get through their draft license stage, but then it's quite difficult for them to obtain professional indemnity insurance. So it's, yeah.
That's, the licensing is always very interesting with IBs. I would like to get definitions as well, because see, when I speak of an IB from a marketing point of view, I think of rebates, right? So an IB refers a client, they get paid a rebate, an ongoing rebate. But for an affiliate, I would consider that it's a CPA or a cost per acquisition, so they get paid upfront for the referral. James, what's your definition of those two?
So it's interesting, as we were saying before, it's the volume-based rebate that forms part of the definition around provision of a financial service. So that in itself is traditionally how people consider an IB to be someone who receives volume-based rebates. Over the last few years, those lines have been blurred with a variety of different hybrid deals. A lot of IBs are coming now asking for a mix of CPA and VBR. Some people in the influencer space are asking for fixed marketing fees. We still consider them to be IBs, but I guess ultimately an IB in the purest sense is someone who does have a relationship with the client and they're providing an ongoing value-added service to the client, and therefore, it's almost a fee-for-service arrangement where they do expect to receive volume-based rebates, but I wouldn't use that as the definition. I would say an introducing broker or an IB is someone who has a more embedded relationship with their client, an ongoing relationship with their client, provides a service going forward, whereas an affiliate is more of a digital marketing channel, a digital marketing acquisition channel, very much like, here we go, we've got a website, like comparison sites, for example, or rebate sites. Mind you, they expect a payment going forward, but an affiliate is more a one-off marketing channel.
Yeah, in moving away from the commercial perspective, from a compliance perspective, I think the IBs, they also provide dealing services to clients, where affiliates are more restricted to advisory services.
Nice. And then let's change a little bit. So what do you think is the biggest myth working with partners that you'd like to debunk?
The biggest myth working with partners, I think, again, it's almost one for Melody. My role is head of strategic partners at Pepperstone. We have a partners agreement, which we issue to introducing brokers and some CPA brokers as well, CPA partners. And then within the agreement, we go on to say you are not allowed to call yourself a partner of Pepperstone. You're not allowed to call yourself an agent of Pepperstone. So it creates a bit of a challenge. I certainly do consider my IBs and all of my partners, our vendors, our platform providers, I consider them to be partners, but we've got to be very cautious with that nuance. And so, yeah, that's a delicate balance, almost a contractual sort of discussion then.
Because we do a lot of licensing and legal work for various new entrants into the market. We have seen smaller brokers and offshore brokers entering into Australian market. They still consider that it is really easy to set up a commission structure or set up IB partnership or affiliate program, but in Australia it's not. As I said, the ban on conflict remuneration and various things basically has made the introducing broker agreement really difficult to draft, and then the structure needs to be very carefully considered. And in our experience, while introducing broker agreement is really one-sided in favor of the broker, but then the broker is actually in practice subject to a very big risk when things go south. Yeah, I'm not sure whether that's your experience, James.
Yeah, definitely. I think the two biggest challenges that we face when trying to court a prospective partner is maintaining competitiveness, both on rebates but also on behaviour and how they can present themselves, how our partners can present themselves and our relationship. So maintaining competitiveness there while also then managing the risks, because any introducing broker business, any intermediated business, when you're relying on a third party to represent you to a large extent, you're then taking on quite a fair bit of risk. And then you've got to balance that with the competitive nature of rebates. A lot of IBs are seeking more prices, higher prices. That increases dispute risk with clients. So, yeah, it's... yes, our contracts are one-sided, largely, but we're also commercial. So you've got to look at them with a commercial lens while managing that competitive sort of balance with the risks and the risk reward.
And James, if we go into that more, like, what do you see as some of the most common challenges you encounter with managing IB relationships, and how do you address them?
Definitely finding enough time in my day to take them all out to lunch, I think, is one of the key challenges. It's maintaining the competitive offering, making sure we're doing adequate due diligence on partners and we're not ostracising partners by asking them to do certain things. We've got quite a conservative approach at Pepperstone, and we do ask people to follow quite strict marketing guidelines. And so it's not just in a rebate or a financial sense, but it's also commercial in terms of marketing and what have you, and then balancing those risks. They're the two biggest challenges we faced.
And Melody, from a legal perspective, what do you find are the most crucial clauses in an IB agreement that both parties need to be careful of?
There are a lot of important clauses, and the one that we often see dispute arise is the event of default clauses, where each party need to understand what event of default are applicable to them, and then what happens if there's an event of default. For brokers, common ones that will be potentially if they are subject to a regulatory event or if they become insolvent. For IBs, there are things such as what happens if you experience a compliance failure, what happens if you make misrepresentations to consumers and then your broker identified that. Consequences for those events of default are also important, some event of default can be remedied, some will directly lead to a suspension of payment and a termination of the agreement. After that, usually dispute arise, and then people will talk about, who owns the client database, and then how a broker can assist with migration of clients if needed. That's the important clause to consider.
That's a really good one. I have a sneaking suspicion you're going to ask for some dirt on the industry. We'll get to some sort of unveiling some disputes we've had in the past, but that whole...
You got some good stories?
Yeah, so I'm just thinking in terms of the inevitable dispute risk that you have when, upon termination, who owns the client and all that kind of thing. You'd always approach this with a very commercial lens, but some of the examples over the years where we have had to terminate a relationship, usually it's because of underperformance and we don't want to carry that risk forward. And inevitably, people, introducing brokers always accuse you of having stolen their clients, and it's not, you would always approach it with a commercial view, and if the value was there, you'd come to an agreement. But yeah, it's that contractual nature is really tough to manage the disputes.
Yeah, so I think introducing brokers are having a much less bargaining power in terms of the client ownership, but in a setup, what we usually call a white label partnership setup, where introducing broker, it becomes a white label of the broker. Usually when those type of relationship terminates, usually this happens when the introducing broker grows so much that it can be the broker itself. When they try to leave the broker, usually there will be discussions and negotiations about client migration, how the procedure should be managed, and we have seen IBs leaving their white label broker with the need to paying a lot of money.
I'd just unpicking that a little bit more. So the whole concept of a white label has sort of ebbed and flowed in popularity over the years, and you've got a lot of experience with white labels, so I'm going to ask you a question, Chris. What I've found over the last 15...
That's not on the script, James.
Sorry. What I've found, and talking about the ownership of the client, having clients knowing the transparency of the contractual relationship, knowing where their money is sat, I've actually found, I hope I'm not going to offend anyone in the room here, but after BBY a few years ago, we had Sonray. Probably no one in the room's old enough to remember any of those. But, those guys were white labels of a large Danish broker who will remain nameless. And, clients didn't understand where the risk was, who their counterparty was. We stopped getting requests for white labels because... This was when I was at IG. Clients actually wanted to know that their money was sitting with a multi-billion pound listed company rather than a white label of a website, basically, with a couple of salespeople or marketing people. Chris, so what's your experience? No, I guess my question is there still value in white label business?
I really think it's a natural progression. So if you would go... Let's say I start my IB business, right? So I have a really good network, I have very good marketing, etc. So I have that, the front office kind of well sorted. I'm bringing in good money, right? As an IB, I think then the natural progression then is to go to white label because, you're expanding. But you can't do everything. You can't take on all the trading, all the risk, all the customer service, etc. So you do a white label solution with an established broker, which then gives you that, right? So you can then kind of cut the deal with that white label broker or the broker for your white label solution so that you can grow your business. And because the end goal then, you're now on the path to becoming a broker yourself. So you'll progressively then start hiring customer support, bringing that in-house. Then you'll start hiring a trading team, bringing that in-house, and then negotiating the fee that goes to the broker for your white label until you're ready to make the jump. Maybe you've got your own Vanuatu license or whatever it is, and then you can then jump to be a full broker yourself. So I think that is unless you've got amazing friends with lots of money to fund you at the start, I would say that is the kind of life cycle of someone.
I That's a really good point. And I think you've been involved in a couple of successful ones. So you've seen that evolution, and Blueberry, for example, is the recent one.
That's right.
And I've got to remember that it's where Pepperstone started nearly 15 years ago.
Well, Pepperstone was a white label of AxiTrader.
Correct, yeah, correct. And that's exactly what the boys did.
Yeah.
And, benefiting from the economies of scale from Goran and those guys to get through. So, yeah.
So I don't know if you guys know, the funny story is because I used to work at AxiTrader as well, and then Blueberry, so it's all very close to home. Excellent. So we kind of went on like the doom and gloom of IBs to start off with. But James, in your experience, what are the key factors that contribute to a successful partnership between brokers and IBs?
It's a little bit more positive. That's good. I think you've got to have really good cultural alignment. So client interests are definitely got to be front and centre, and then appreciating the risks that we talk about a lot, and because again, that's such a big part of leverage business is risk management, and so really being aligned for client outcomes, making sure that there's understanding of the obligations on both sides, and despite it being a one-sided contract, we're still obligated commercially to provide a good service and what have you. So I think that's probably the key thing, and technologies become very important as well. But in terms of a successful relationship, you've got to have a very shared culture, and that could be one of two ways. I mean, there are some very successful businesses out there that would be onboarding Australian clients offshore with IBs who are happy taking that risk. There's been some high-profile examples in Europe recently where European clients have been off-boarded to sunny islands around the world. And I think you sort of started mentioning that with some of the offshoring before. People are happy to take that risk, and IBs want to be involved in that. And then you've got other brokers that are a little bit more conservative, that are sort of erring on the side of caution and are looking for a longer play. So I don't know if you've had any experience with that.
So I agree with what you said about the culture thing. I think it's really productive for the brokers to provide education to introducing brokers, IBs, about, say, why this compliance requirement is on me. Instead of just say you have to comply, I think it's better to educate them what kind of risk I'm trying to address, and then what if you don't do this, how much money or what kind of things I will be suffering for you. And that I think that way will decrease the negative sentiment from IBs to comply with your compliance requirements a lot. I think that will be really helpful. And then especially we have seen the Australian regulator previously, they have been focusing on monitoring the brokers as the product issuers, but nowadays they really coming down looking at very closely as to the distribution of the financial products, which IBs plays a crucial part in.
It's I think that you made a really good point there about incubating and bringing on partners. I think that gets overlooked a lot, to be honest, from what I've seen. And we've always, with the brokers I've worked with in the past, part of the partner program was to do incubation with them, right? Like not even just legally, like with marketing too, like seeing them as business partners and helping them to, well, how are you going to get clients? What ideas do you have? Do you have a network? And even like giving them education courses to improve their small business, which is ultimately what it is, right? We're enlisting these little small businesses to help out with our own.
Yeah, totally. And there's a philosophy that we're really living and breathing at the moment with Pepperstone is the you grow, we grow together sort of thing. And exactly right. So it's educating around the compliance requirements, the regulatory requirements, but then also helping with marketing material, helping with other material for websites in terms of engagement. Even going further still, I touched on technology before, CRMs and providing more client data and analytics for partners, because a lot of our partners are acquisition channels, so they want to be able to see what activities they do in a timely manner are creating better acquisition, creating better value for their clients, creating better value for all of us. So it becomes a business mentoring. I think you mentioned the term mentoring before. It becomes a business together to grow together.
All right, Melody. I have to go back to the doom and gloom because you are the lawyer, and it's rare that if things are going well and we don't really, it's a lot easier, right? But can you share some examples of disputes between IB and brokers that you've seen and how they were resolved?
Within what I can say, outside of the confidentiality clauses, we have seen a lot of disputes when the IBs does not have their own license and they sit on the broker's license. That's a really high risk setup in our view. And recently we have seen one IB that the broker was comfortable giving them a limited authorization on what they can do, but the introducing broker actually work outside of that scope of authorization. When complaints arises, I think the broker wasn't so nervous because he thought, oh, that's not authorization I provide them. But then the Australian complaints, FCA is holding a different view and then still hold the broker responsible for the conduct of the IB. I think that's a very brutal thing, but that's some lessons for us to learn. So usually now when we advise on our clients on the IB agreement, we usually suggest them to put a personal guarantee clauses in, because IBs, when come down to the party to the contract, usually is a company with very little assets, and then for them it's like there's little to lose, while the brokers are usually heavily capitalized, and then when the complaints comes, the broker usually have to pay for that. But with a personal guarantee clause, you'll be able to retrieve some of your loss from the key personnel of the IB.
I just want to give some dirt. I want to talk about real world things. Sorry, not that wasn't real world, but some of the horrible things that I remember, and particularly around contracts. Like, we are often obliged due to regulatory change to change our business practices. So, if anyone remembers 2013 when FOFA came into force, we could no longer pay rebates on retail client business to introducing brokers without active consent, without all of this other things that got brought in for the best outcomes for clients. Good outcome. But trying to explain to an IB who's worth millions of dollars to you that this is now an obligation that we all have to do is, that was a pretty tough one. And another sort of similar example was with ASIC PIO that came out, was it March 21? Where we could no longer pay sort of rebates and trade incentives and what have you to retail clients. Then rebate websites around the world have always been very popular, but we could no longer pay rebates in a lot of jurisdictions as well. And of course the IB thinks that's my decision, but unfortunately there is regulatory change, and that inevitably creates a little bit of friction, and we just have to navigate that as best as we can.
Awesome. Before we get to the closing ones, James, I do want to get your view on, how you see the role of technology evolving and managing and optimizing the IB experience.
We're investing at Pepperstone. We're investing a lot in technology at the moment. It's really exciting. I don't know if everyone's noticed, but we released our own trading platform a little under a year ago. And so that's client-facing tech. We're also investing a lot in our own middleware and what have you. We still value our platform partners and vendors really highly, but we're investing a lot in technology. And David Jenkins, our CTO, spoke on the main stage earlier today. And so it's not just in dealing technology and infrastructure. We're also investing heavily in payments. But also I have my own partners value stream now, and so we're releasing new changes to our partners portal, the way we're manufacturing rebates and delivering those, calculating and paying rebates. So I see it as being really, really important, and a future state I see is where I don't have to do spreadsheets anymore, and so the IBs can do a lot of self-service within the portal. a lot of it will be own-led, and we'll be able to provide a lot of marketing material. There are some businesses out there that do this really well, and we're starting to invest a lot more in that area. So I see technology playing a major part in our future growth.
Yeah, I think they get overlooked. Like, I know personally, partners have looked at the partner portal, and just went, no, we're not changing. So it definitely helps the bottom line. All right, let's go some other closing off questions. So, James, what do you think is one key takeaway or piece of advice you would give to brokers looking to improve their partnerships with IBs?
Be really clear and communicate expectations for both parties from the outset. I think clear communication is absolutely key. And then just keep open lines of communication throughout. That's really the key thing. And again, it comes down to alignment. And some things will change over time, but really making sure that you're balanced and keep clear communication.
Melody?
I think people should see it as we are working in a community, and there are different players instead of the counterparties to a contract where disputes may arise. Clear communication, that's very important. The other thing is, I think brokers or IBs, they should consider, pushing the IBs to define where their value are to the consumers instead of the values to the brokers. It's the value to the consumers and what they can do for the consumers, and moving towards more a fee-for-services model.
And then let's go trends. So what trends do you foresee shaping the future of IB and broker relationships in the next few years?
I think we're talking about one-sided partnership agreements and contracts and what have you. I think we are going back to more flexibility for partners and offering more, certainly from Pepperstone's perspective. We're seeing quite a lot of demand, not so much from Australia, but from some of our other offices around the world. We've got 9 licenses around the world, and we're getting partners coming and asking for more flexibility around account types for clients, the way that we charge, the way that we rebate, but then technology's driving all of that. So the big trend I see, particularly for my little world, is the impact that technology is going to have.
Melody?
Oh, as I said, so from our perspective, it's more, we have seen that IBs, it's difficult to get insurance, so more IBs, they are saying, giving the regulators when they write their business description is more of an education, affiliates, and then what they can do for the consumers. I think the future for IBs lies as to they are actually providing services to the consumers and helping them educate what the product is, and help really focusing their services as to how to distribute the product better, instead of, I'm trying to create more sales and then more transactions and then getting more rebates from the broker.
Look, it's been an absolute pleasure. Thank you so much. I hope everyone got value from our discussion.
Thank you, Chris. Thank you, Melody.
Thank you, James. Thank you, Chris.